ladies and gentlemen. Infinox Capital here with Wall Street Institute and Company. Welcome to the third episode of our Tuesday's Technicals, an episode where we have an overview of the financial markets, beginning with the fundamentals and then going on to breaking down the charts. Interesting news this morning. We decided to be offering for the whole month of October, free classes for those who funded their accounts with a minimum of $100. Our partner broker, which is Infinox, you can go to the links that are below and then click on the link that's below and then go to sign up and you open your trading account with us. Without further ado, let's get to it. One of the best features of our partner broker is IX Intel. IX Intel is basically a site or a page in the website that gives us the movements and the developments of the financial markets, specifically on the macro picture. So here we've got researchers that are basically looking at how the market is changing every day through market intelligence and expert analysis. So they publish this in real time for you to make the right decisions at the financial market. So last week we're really beginning of this week, everyone was concerned about where the market was going. As last week we had the CPI really disrupting a lot of movements in the financial markets, which was very fun to see how new students reacted to that because they're not familiar with the news events. So we'll be alert this week ahead as well to see where the market was going. And furthermore, on news that we had the previous week, we had the pound recovery. We'll see on the chart how that goes. We also have a massive rally that continued from other pairs that took a beating from the CPI. We also expecting some inflation that is driven by what happened in the US, basically when they printed when the US CPI print sends US higher to risk plunges, which invoked our risk on and risk off environment. So to learn about that, you just fund your account, man, with the link below, and then join us for our weekly trainings. Mondays to Tuesdays, it's free beginners trainings, and the Wednesdays to Friday, we're doing smart money concepts, which is the same concept that we use to analyze basically our chart. Now, because most of our pairs or the pairs that we trade, they're dollar code pairs, so we begin our analysis with it makes sense for us to begin our analysis with the dollar index. To those who don't know, a dollar index is basically I'd say an indicator or an asset in the financial markets that measures the strength and the weakness of the dollar, just the US dollar alone. So what we always do is we begin our analysis on a weekly time frame to see where the market is potentially going. So what we had here was what we currently have is the DXY reacting to that order block, should I say a supply area that was formed in Monday, the 3rd of January 2002, probably about 2 decades ago. Market revisiting those areas, it would be nice to see the reaction, but I think about 3 weeks from now, 3 weeks ago, we saw the market reacting to that. You see this doji, nice pin bar candlestick, pin bar below. To me, this is just a consolidation for now. I can't confirm any setups as of yet. And then we have below here, we've got a demand order block. Let us see how market reacted to that. Put it like that. Then stepping down to daily time frame to refine our order blocks. It's gonna look like that. Already had that reaction up there. Step down to a 4 time frame for more of the structure. Sorry, just a second. I need to refine this. Like that. Take this. This is where it was supposed to be. Supposed to end here because that's where the last reaction was. Nice this a bit as well. Shut is running away from me. All right, and to me, I've got a couple of interesting areas. This equal highs, these equal highs, and this equal lows. That is liquidity that's waiting to be taken out. Further refinement of the order block. There we go. And this right here is imbalance. We've got an imbalance here. Oh, interesting enough, you can even learn from the Technicals Tuesdays that we post every day. So we've got liquidity here. Support, imbalance, and equal lows, equal highs, trendline liquidity act as a magnet, basically attract price to those areas. And if I may, I would say the market needs to come, if I may be so bold, needs to come back and basically mitigate that order block. So to expect the market to move to the downside like that in this manner. So we'll see what happened as the week continues. Further down, US oil. US oil, no analysis exists here. So once again, what we normally do is look for the major high, low, major lower high. But before that, let us consider this unmitigated demand order block. And let's see if we have, if we have a supply order block here. Yep, it did react to this one right here. So I think we can say, or we can confirm that we are on a downtrend. Let us do some further refinements. Let's fix that. We've got a demand there. This is supply. So this is what happened here. This was mitigated. So with that said, we have to find a range of focus. I'd say first this low. And actually, let's look at this lower low here. So now you have an area of focus. Forget about the rest of the information on the left. For me, right now, it's noise. My focus will be at this current area. And if we look to the left, look at this order block here. See that? We already had a reaction. Hence, my comments before to say, I think we're in a downtrend as far as this is concerned. But when you go to a 4-hour time frame, this just looks like lots of imbalance that was left here. But on a daily time frame, looks like a clean mitigated area. So we will wait and see what the market does. But really, we're anticipating a further movement to the downside and mitigation of that order block. Right. Gold. Let's look at gold on a weekly time frame. gold did react to this interesting area of demand here. There we go. Let's change that to colors, demand colors, to the area of demand. And the last, or the range that I'll be looking at personally, it will be this one. So I'm anticipating gold to come back to the areas of 1771. Why? Because we had the breakout structure here, which makes this our major lower high and the major lower low. Let's mark those so that we know what range we need to focus on. Focusing on this range. There we go. Stepping down to the daily time frame to further look at the structure and refine our trades. What do we have here? Right, setup refined like that. So what we have here is we had a breakout structure here. Breakout structure here. And then the market made a lower low, lower high, lower low, and then boom, we broke that lower high, which was a change of character. Change of character, change of character. There's a difference between breakout structure and change of character. So we got a change of character right there. Let's see if we have an unmitigated order block somewhere down. There we go. So we've got this unmitigated order block, which also inspired lots and lots of imbalance in this point right here. So this is what I'd anticipate. So we have some equal highs here. Spend too much time with your chart. This thing's just it gets easy to identify them. So like that, and then there's a supply. So there's liquidity up here as well. There's liquidity here. But short-term focus would be this. We would expect the market to come down to this order block and then push to the upside. So there is your setup on gold for the week. And you don't need to trade a million setups in a week. Personally, what I've seen, all you need is like 3 trades maximum a week, and you would have made enough bank. USDJPY. Interesting. USDJPY has been just breaking the highs, breaking the highs, breaking the highs. I'd like to take your attention to this interesting area here. Excuse me. This supply area here, which was left unmitigated in 1990, Monday the 16th of 1990. It's very interesting to see a price visiting those areas. And if you can look at most pairs, they are basically retesting major lows or major highs. So we won't do much tampering with this one until we have a reaction to that, probably get a change of character. That's when we're gonna start getting involved. Part of trading is knowing when you need to sit on your hands, basically. So dollar CAD, we've got that demand there, and we also had a reaction to that higher time frame area of interest right there, which was also formed in 2002, 25th of May 2002. It was left unmitigated. And if we scale down, let's see, on a daily, it's much clearer because we have that pin bar, that reaction to that high time frame point of interest. You see that? Boom. So that's a rejection telling us that we're going to have some further movement to the downside. We won't do much analysis here because we have a trade running, but briefly, we wanted to see that reaction. We wanted to see market break structure or the last higher low, change character, and then revisit the order block that broke structure. So targets are right here. This is it was an initially 12-hour trade setup, but we are running at slightly around 7.5% so far. Remember, if you want to catch this moves, there's going to be a free Telegram link and the description below, and find those accounts. Use the link that's going to be sent for you to open an account, open it, verify it, and fund it with a minimum of $100, and you'll get access. Pound dollar. This is the major lower high, and that's a major lower low. Right. And stepping down to a daily time frame to see if we've mitigated any order blocks. So right here we've got this one. Oh, it's very hard to be accurate here at times, but we'll step down to lower time frames and refine. Personally, I see this order block here. Apparently it was mitigated, but my worry is this one above it wasn't mitigated. Finding like that. Oh, perfect. There we go. So obviously we did mitigate this one, and if we refine, we'll take this. And it looks like a very small order block. Aha. I'll take this order block right here. Or let me just copy the whole thing. Right, when you refine up here, we've got that order block. So very interesting, because you may also take this as equal highs. See? Of which we need to push to further to the upside to mitigate those areas. What I do know, however, is what I've noticed is a hidden order block here, which we've already reacted to it, and that trendline liquidity, which needs to be taken out, which now personally I would look at this being our targets. So this is a range of focus right now. It's a range of focus because we also didn't come back to mitigate this block, that block structure. So let's see further to the downside. Look at how clean that order block was and how nicely it was mitigated. So put that order block there. Reaction, liquidity sitting below. So with that said, what are we looking at? We're just looking at the market to do this. Grab my tool, push to the downside. Like that. So this is what we anticipate. And remember, anything can happen. As we anticipated these highs to be equal highs, which means there's liquidity sitting on there. The people who have their stop losses here, taking sales, there are also people who have their buy stops here, which the big banks can take them out before they push to the downside. Anything can happen. Anything can happen. Keep an open mind. Keep an open mind. GBPUSD is not much we can say about it because we're still expecting to react to that higher time frame. EuroCAD, We also have a trade running here. Initially, it was a 7.2-hour trade, which was sent to the group. Just to show you guys that. There it is. Right, there was the setup sent to the group. If you were part of it, you took advantage of it. If you are not, sorry, but you can still catch the train. Since we have a free link that's gonna be shared below where you can get those setups. So with EuroCAD, we still anticipate the market to come back here and push further to the upside. Take out this liquidity as well. So this is just the nature of the market. We had the impulse, we have a correction now, and we're expecting another impulse to the upside. With that said, ladies and gentlemen, I hope you enjoyed this episode of Tuesday's Technicals. And I can't emphasize enough the importance of joining the classes. It's free. You don't have to pay for the course. All you have to do is to fund your account. Open your account with the link that's going to be in the description below. Fund it with a minimum of $100. If you're a beginner, we've got provision for you. If you are a intermediate trader who's looking for a strategy, we've got smart money concepts for you. With that said, ladies and gentlemen, thank you. I hope you guys have a profitable week. Cheers.